What's up, guys? Steven Dux here. I'm finally back. So it was great to meet you guys at the conference. I think conference went well, and we also did a live trade making $20,000 on Monday. And I'm very grateful to meet all of you guys. So thank you for all you guys' support. In this video, I'm gonna give a little bit of tips about how to really trade a microflow, since we had about pretty much over 10 microflow for the last couple of weeks. And we're gonna talk about how to really trade them and how to really use a different method that into bounce short or breakout levels, and how to really buy breakouts. So first of all, let's talk about ARCI. This is one of the patterns that was a little bit strange since the last couple of days. At the first green day, and it did a huge spike from 3.5 to 7. Then a lot of people are looking at shorting into it because they see this huge consolidation crack. But first of all, when you see this, the stock is doing consolidating and tempted to crack 1, 2, 3, 4, 5 times in a row, this is the situation that you shouldn't be shorting into. And as soon as you short into a crack, the stock did a reverse. Let's say if you shorted into this bounce and reversed into 6.3, this is where you should cover, because typically when low flow cracks, it doesn't really have that much strength to come all the way back and to re-spike again. ARCI, one of the most trappy stocks into the consolidation. In the future, for September, October, November, the market's going to get really, really hot. I wouldn't really recommend shorting into this type of microflow on the first green day. So please be extremely careful. There's a lot of manipulations, and you can take a look of ARCI, what happened next day. This is where the destructions happened for the longs. So when people say, oh, using overstaying gap down, first, using overstaying gap down, you need the minimum volume. Minimum volume needs to be 100K candle at least. So if you take a look at the candle at the beginning, the candle is only 50K, 20K, 40K. That's not really sufficient to really use overstaying gap down. So of course it will cause a squeeze. And when the stock is squeezing, take a look at the volume. It's taking really little volume, spiking from 6 to 9, 100K. That's extremely low. So that means the liquidity is really low. Second, it's on low flow, SSR. So the panic and spiking percentage will be amplified than normal tickers since on SSR. Third, there's gonna be a huge spread. And if you want to enter in the breakout level, let's say you want to enter at $7, your execution will be actually 7.5. So you already missed about 50 cents at the beginning. When you exit, you're gonna exit 50 cents less. That's how you really miss $1 when you're trading into a low flow. Now, as soon as the stock decides to dump, because people are manipulating this one, so first, you cannot get out. It's on hold pretty much every 2 seconds. Second, super low liquidity. You're gonna end up taking a loss. Third, you don't know where it's going to dip. Low flow dump, since the fundamental is so bad, it's really difficult to find a dip in the support. If you try to dip buy at 6, you will likely end up pretty bad and selling at 4 or 5 below. So this is the reason why I don't really trade microflow. There's only a couple ways to trade microflow on the short side, and go on the long side, not really recommended because volume too low. You need sufficient volume first before you go long. Always pay attention to the volume. Alright, so let's talk about FFHL. This is the same thing. It did a breakout and dumped all the way back. This one's pretty much not really tradable on the short or the long side. First, the stock did a dip, huge trapped a bunch of short sellers, and decides to gap up in the second day. Now, you can't really short at 7 because there's so much support underneath. So you can kind of just watch the stock to be dead and consolidate for a couple of days, and finally decides to crack that 5. So when this ticker does a bounce short, it will become a potential short using $5 to $6 area. But other than that, first green day, not really tradable, too much volume. You can trade it as a gap up short to try to test it in the morning, but you likely take a loss. Then after that, it's not really tradable. So either on short or long side, because on this type of dump, it's really easy to shake the buyer out. Very, very easy. Each candle dumps about $1. If you can take a look, 5.3 to 4.4 is $1. 5.4 to 4.6, so almost $1 again. So Microfloat, extremely dangerous, not recommended. Always stay away from these if you're not very experienced. Either you are going long or short. Always pay attention to the volume. If you want to go long, it has to be sufficient volume. It needs to be crowded, anywhere between 20 million or above. So on RKDA, this is also one of the very interesting chart. The stock did a multi-day breakout with very thin volume. You can take a look. Initial volume was traded about 50 million, 40 million, and its breakout volume traded about 20 million. Since there's not many people trading this ticker, and the stock tends to fade day by day, at this $10 level, first, there's no consolidation, second, there's no volume, so shorting it or go long, very unpredictable. One of the points I really want to emphasize is there's going to be so many trades, potential trades in the next couple of months. And there's going to be trades that you can't really place any type of trades, but you can see the stock is going 200%, 200%, 400%, and that will give you so much FOMO. And you can see people on Twitter, social media that say, oh, I made about 2,000, 4,000, 10,000, doesn't really matter what the amount is. And it will give you a lot of FOMO. It means a fear of missing out. So when you have that emotion in your mindset and you're tempted to go into a market, you are likely to lose. It's because you see people making money and you're looking at the ticker that you cannot really place any type of long or short trades, and you're still trading it. And at that point, you don't really know what pattern you're trading. This is one of the major issues with all traders or beginners. They cannot control their emotion, they cannot control their hand. You're going to the market with a purpose, you're going to the market with a certain winning percentage. That's how you can become consistent and profitable. So this is one of the 3 examples that I want to give out and to tell people that if there's no pattern, no trade, no volume, doesn't really matter how much is going up, doesn't matter how much is going down. You cannot predict that type of drop or cannot predict that type of push. So always track your statistics, know your statistics, know your odds before going into any type of tickers. And hopefully the market starts getting hot after August. That'll be the end of the video. Thank you very much, and you guys have a great day.